Hello everyone, it's been a while. Today I brought two materials to share with you. The first is from the World Economic Forum. You've probably heard of it. They released a report related to Bitcoin. The message is that regulators shouldn't miss the right timing. There were a few striking points I'd like to share with you. The second is from Standard Chartered Bank. This UK-based bank published a report comparing Bitcoin and Ethereum prices. When I looked it up, I found one called the Bitcoin Investor Guide and another called the Ethereum Investor Guide. I skimmed through them, and the Bitcoin guide didn't have much of note. So I downloaded and read the Ethereum guide instead. This was actually the bank's first official report on cryptocurrency. That felt significant, so I wanted to dig into it a bit. That's why I turned on the camera to discuss it with you. First, the World Economic Forum is sending a message to financial regulators. They're not advocating for a total ban like China does. Rather, they emphasize settlement finality. Mainstream finance knows Bitcoin has this property, but rarely talks about it. But this WF report explores the finality of settlement in great depth. There are slightly different definitions of this concept. The most authoritative one comes from the EU, when they unified their financial systems. This report uses that same definition. Settlement finality means once the money is sent, it's settled. Even if a financial institution collapses midway, the payment still goes through. The idea is that the financial network acts as a unified organic system. This concept is even mentioned in Korea's central banking law. But as we saw in Kabul, it often doesn't work that way. People don't expect the financial system to freeze, but it can. In reality, traditional financial systems can't guarantee settlement finality. It should be guaranteed under all conditions, but it's not. But Bitcoin is irredeemable. Once it's sent, you can't reverse it. Even if you're the rightful owner, if you lose your private key, it's gone. You can't even pass it on as inheritance. That might be seen as a downside in terms of consumer protection, but from a finality perspective, the WEF says that's incredibly powerful. From a regulatory perspective, there are three key concerns. First is criminal use like money laundering. Second is consumer protection. Third is capital control, which is essentially a country's monetary sovereignty. From the regulator's view, Bitcoin poses challenges in all three areas. So they're looking to narrow the regulatory scope, and their current focus is on self-hosted wallets. A self-hosted wallet is, simply put, like the paper wallet I showed you last time, or any kind of physical crypto wallet, meaning wallets that are not held on exchanges or not under custody at banks. Wallets that can send peer-to-peer at any time are the biggest regulatory concern. That's because only those wallets truly offer finality of settlement. So it all ties back to the same issue. Because of Bitcoin's inherent property of finality, it clashes with consumer protection. It crosses borders freely, challenging monetary sovereignty, and it bypasses financial networks, leaving little trace. So it can be used for crimes like money laundering. These three regulatory concerns are all triggered by that one property. The report addresses this clearly. My personal impression is this: banks are going to push for indirect ownership. The World Economic Forum's overall message seems to be the best way to ease money laundering, consumer protection, and capital control concerns is to suppress self-hosted wallets that fully maximize Bitcoin's finality and nudge people into owning crypto indirectly through banks or financial networks. Just like how you don't own physical gold, but a gold-backed account at a bank. That's the model they seem to want for Bitcoin too, at least from what I understood. Anyway, that's the gist of the WEF report. Now, the Standard Chartered report is really interesting. It compares Bitcoin and Ethereum. Their conclusion: Bitcoin may have started it all, but Ethereum represents a much larger concept. They seem to forecast that Bitcoin could go up 3 to 4 times in this bull run, but Ethereum could go up tenfold. Wow. Yes, they're saying it could rise 10 times. Standard Chartered just fired celebratory fireworks for Ethereum. Let's give them a round of applause. Congrats, Ethereum. Ethereum really does get a lot of recognition from the mainstream, but even they admit these assumptions and numbers aren't based on solid evidence. They compare Bitcoin to the credit card market, but Ethereum is compared to the entire financial sector, including credit cards. That's how they came up with those numbers. And even they say it's just one way of looking at it. Still, their enthusiasm is quite intense. They clearly studied Ethereum very thoroughly. They even explain concepts like sharding in ways lay people can understand, especially in the context of Ethereum's move to 2.0, transitioning to POS, which reduces electricity usage. They contrast this with Bitcoin, which arguably burdens the environment. That's one of their key points, but I don't necessarily agree with this report. There's a part they failed to mention. Bitcoin isn't just any crypto. It's something that can substitute for the dollar, yuan, or gold. Not that it will fully replace the dollar or entirely replace gold either. But if it can be used in that way, then Bitcoin is essentially a commodity. It's a single asset class. But the people writing this report, they mistakenly compare Bitcoin, which is a single asset, to Ethereum, which is actually an entire industry. So where does their understanding fall short? They haven't explored the fact that Bitcoin is already being used on the Ethereum platform. It's actually locked and wrapped on Ethereum. It's tokenized and used in that form. So they lack the concept of interoperability between chains or the role of smart contracts. You remember what I said, how people, wine, tuna, the entire supply chain can be uploaded, along with identity information of the individuals involved, all combining into a global supply chain powered by smart contracts. That concept is missing from their view. So they end up comparing Ethereum to banks, but it should be compared to CFTC-regulated commodities or to the SEC securities markets. Won't securities also be tokenized? If you're talking about an industry, you need to include all of that. If you define all that as Ethereum's market space, then Ethereum isn't just competing with Bitcoin's market cap, it becomes colossal. Like Ethereum advocates say, it could be bigger than Facebook and Google combined. So you should read this report with a critical mindset. But here's the thing. In my experience, especially among economists, they tend to be fiercely opposed to Bitcoin. They really hate Bitcoin. You've probably seen this yourselves. But those people still live in this world, right? They've got eyes too. They see what's happening. So when Bitcoin keeps going up, it frustrates them. But they need a way to save face. And we should give them a way in. Knowing all this, that's where Ethereum comes in. I have a very smart friend. He used to completely ignore Bitcoin. But a year or two ago, he said, Bitcoin still doesn't impress me, but I think blockchain will be big. And he started reading Ethereum reports like this one. You know, people often confuse Ethereum with the entire industry it enables. So they read those and say, Ethereum is the face of blockchain. Then they say, I am against Bitcoin, not blockchain. Ethereum really appeals to them because it talks about utility. It avoids issues like sunk costs or monetary disruption that economists might dislike. It doesn't threaten monetary sovereignty. It feels more like a new kind of internet. And of course, they don't want to fall behind the trend. So they say blockchain is good. So when they say that, the blockchain they mean is Ethereum. What's still missing in this report is any mention of big tech potentially entering Ethereum's massive target market. Also, the report mentions the competition Ethereum faces like Solana and Cardano, which brand themselves as Ethereum killers. But it only vaguely states that Ethereum will enjoy first-mover advantages, similar to Bitcoin. No, that's different, completely different. Bitcoin is a monetary system. It operates under monetary gravity. Ethereum, as an industrial platform, is still in a standardization race. Ethereum is only halfway to winning that standardization race. Ethereum is clearly the queen bee in the blockchain and crypto ecosystem right now. But while it's a focal point, that focal point keeps shifting. Bitcoin is the one focal point that doesn't move. So when challenges like Solana or Cardano start gaining traction against Ethereum, then new ones emerge and rise too. It keeps rotating like that. So prices might double or triple in a matter of days, making you feel rich, then crash just as fast. Some do eventually break through and rise long term, but not without serious hardship. That struggle is inevitable. Ethereum went through that too. That's fine and fair, given Ethereum's status. I actually agree with Standard Chartered on the point about competition. But what they fail to mention is this. Ethereum and blockchain smart contracts especially are aiming for markets much bigger than they realize. And if big tech doesn't respond, they could be in serious trouble. And the same goes for Korea. Ignoring this could be a huge mistake. Some fast-moving traditional companies in Korea will respond, I'm sure. And the same will happen globally. Still, the reason I introduced these two mainstream reports today is this. The mainstream is now studying this space intensely. And that's a good sign for you. Bitcoin and Ethereum both are in good shape. Calling this a bear market doesn't quite fit. It just doesn't add up. If it were really a bear market, the mainstream would be ignoring it. Prices today make it hard to tell if we're in a bull or bear market. But judging by how the mainstream is paying attention, it's clearly not a bear market. That said, I'm not sure it's a full-on bull market either. So you're probably okay investing in almost anything right now. But even if you love altcoins, it's wise to keep at least 50% of your portfolio in Bitcoin and allocate a significant portion of the rest to Ethereum. Anyway, I'm sure many of you were excited when Bitcoin crossed $50,000 recently, but it dropped back in just 2 days. Some of you might have lost some money. That's normal. $50,000 is one of those focal points. It's not as hard as $10,000 or $100,000 was, but it's still not easy. So hang in there during this tug of war around $50,000. Stay strong and plan wisely. Have a great week. Thank you.